Srivastava also joins us in the show to talk to us a bit more about that. Rohit, very, very narrow range of sorts at the index level, even though the broader markets has been outperforming. Do you think that's going to be the nature that will be between 24,500, 25,000?
Very much, I think it's going to be like that. The Nifty is probably lost momentum ahead of the rest of the market. And it's just going to be a waiting game for the rest of the market to complete doing whatever it wants to on the upside, which is mainly the strength that we are seeing in mid caps and small caps. There's also a possibility that Bank Nifty may have one leg to the upside left. But I wouldn't expect too much from the Nifty. So there's going to be that divergence between what the main index is doing and what other parts of the market are doing, at least in the short term ahead of Christmas.
Right. Metals are one sector which has been buzzing quite in trade. There are multiple reasons, fundamental reasons at least, but how are the metal stocks looking like on the technical front?
So far, they all look like retracements of the decline that we saw between October and November. Something is done a 50% retracement. If you just look at the metal index, that is where it is. So I'm not really anticipating more than a retracement till we really see a top in the dollar, because the metal prices are highly correlated to what happens in the dollar. And there is really no clear sign right now that the dollar has peaked. So I think we'll still be watching that very, very closely in terms of indications. Even tonight, I think the CPI data in the US will play a role in determining how the dollar and metals move. And that then ends up having an impact on metal stocks out here as well. So I think for the day, I would probably be a little cautious. Maybe the markets are running up in hope of, metal stocks are running up in hope that inflation data will continue to cool, but if that doesn't happen, there could also be a negative reaction to that. So given the overnight event, I would probably, stay away from metals for the day.
The metals for the day, but Rohit, if I had to ask you, between the banking index and the IT index, which is looking stronger, what comes to mind? Because banking index has been outperforming for the last few days. It's less than 1% away from its all-time high levels, and the IT sector already at record highs.
So I'd put my bets on banking more than IT for multiple reasons. When we look at the long-term strike valuation chart on our strike platform, we see banking stocks at the bottom end of the valuation. They've picked up a bit now, but coming in from the bottom end, they are much more attractive. The IT sector does play a lot like a defensive. When you have money that can't go anywhere, people end up putting it in IT. But even though IT has outperformed over a period of time, it is also highly correlated to what happens in the US. And, recently we've been seeing some selling and some correction in the US tech sector, the NASDAQ, selling off over the last couple of days. So if I had to choose, like I said, I would probably think banking is a better bet. Probably has one more leg on the upside, as I mentioned earlier. And we look for, potential upside to continue there rather than on the IT sector.
Cement is another space which has been buzzing in trade. A lot of stocks that have been gaining on the back of price hike and a potential uptick in demand. Anything interesting looking there?
You mean in autos?
In cement.
Cement, sorry. Well, cement, I don't really track the cement group so closely, so that's sort of out of my radar.
Not tracking cement that closely, but what about consumption? FMCG went through a bit of a rough patch. Would you recommend any bottom fishing?
So there could be a trade there. I did think so a while back, and then they again sold off a bit, but they haven't really fallen below the low that we've made in November. So till we don't really break that low, the risk reward for a trade could be favorable. I'm not looking at all-time highs, but if you look at the price action, we've not even retraced 38% or 50% of the entire fall. So there is a case that FMCG supports the market at some point of time, giving that fillip, and also ends up acting as that defensive sector as the market tries to roll over. So just when you start seeing some weakness, maybe in the broad market, you might suddenly see money moving into FMCG as a defense, and that could give you that uptick. So I think there is a good case for a trade on the FMCG stocks.
Good trade on the FMCG. That's coming in from Rohit. Well, thank you, Rohit, for joining us and giving us your perspective about the markets. Moving on.
If you like this video, then like, share and subscribe to ET Now.